Shares of Zomato hit a fresh record high on Wednesday, climbing nearly 5% to a peak of rupees 281.5 on the NSE. The stock now has been on an impressive run, surging over 13% in the last 5 sessions alone, fueled by growing investor confidence and strong trading volumes. In fact, Zomato is one of the top performers of the year. Year to date, the stock is up almost 120% in 2024, far outpacing Nifty's 15% rally. Now, despite this sharp rise, brokerages believe there is more upside left in the stock of Zomato. Global giants like JP Morgan and Jefferies recently raised their target price to 340 rupees and 335 rupees per share respectively, signaling a potential upside of over 20%. But for traders out there, should you jump on the bandwagon? Is the risk-reward ratio still favorable enough for you to take a punt? To discuss this and more, we have Akshay Bhagwat, Senior Vice President of Derivatives Research at JM Financial, joining us. Akshay, thank you for giving us time here on Newsline. Now, shares of Zomato, they are on a 5-day winning run, have gained about 13% in that time frame. Now, we have had some optimistic reports from the brokerages like Jefferies and JP Morgan, but from a technical standpoint, what do you think is driving the stock and how is it looking on the price charts?
Well, see, for Zomato, it's been a very strong one-way rally in the stock. I think it's unstoppable. I think right from 2023, from the levels of 50 odd levels, there is no consideration of overbought parameters on the technical charts. 270 is where it trades. So, yes, a very strong technical structure. But now, if you were to micro time this as to whether I should be buying this at the current rates or not, then the sense is that you might as well be better off waiting for a dip at the current rates. Now, one of the reasons is that there is a tendency for the stock to show some bit of a correction at the levels of 280. Now, this is only for the short term, if you want to micro time, which is the best level to get into the stock. So this has been in a range for the last 15-20 odd sessions, is at the upper end of the band on the daily charts. And if the correction or a slight profit booking unfolds from the current zones, you can expect a level till around 255, 260, which I feel is a good entry point for a trader. So yes, the price chart is very strong. It is just about where I need to buy the stock. Then the exact levels to predict as going by the current charts is wait for a dip around 260 odd levels. That's a good risk reward payoff you would get. The longer term chart structure is very strong. 240 is a massive support. Till 240 holds, I think there is no reason to be worried as an investor if you're holding the stock. Even if it corrects to 260 or as a matter of fact, 250, it's not at all a reason to worry. You can add it further. And broadly, as of now, the target potential for the stock is working till around 310. That's the potential projection I'm making in Zomato in the next couple of months.
Now, given the strong rally in Zomato stock, would you consider it a high-risk trade? And if it's the case, what type of investors should consider investing in Zomato and for whom would it be best to avoid?
See, if you are taking a fresh buy entry at the current zone, yes, it's a bit of a risk considering the fact that there has been a very strong run up in the stock in the past 1 year. So really the risk reward payoff, which you always consider when you take a trade. So the risk here is too high because from here, although the momentum is strong, the price structure is strong, at the best it may go till 290, 300. But if you are taking a betting on the stock at the current rate, and unfortunately, if you say the stock takes a U-turn till 250, 260, then you're playing for a 30 rupees, 40 odd rupees risk for a 25, 30 odd rupees gain. So 1:1 risk is really not what you should look forward to. There are better stocks which you can look forward to, which give you a good minimum risk reward payoff of 2:1, where 1 is your risk and 2 is your reward. So I feel wait for a correction. If you are a trader, especially if you are a trader, this is the risk you have. Even if you are investing, this is not the right level to get into a dip around 240, 250 odd levels. Ideally should be a good opportunity to take a re-entry in this group.